Sanibonani, good evening, Dumalanga, and welcome to episode 172 of the Private Property Podcast. I'm your host, Zama Khumalo. I do hope you had a restful day of reconciliation yesterday. I know we were not on your screens. Well, we are back, of course, with all things relating to property. And if you're watching us for the first time across our social media platforms, then welcome. Certainly, where have you been? You've got quite a lot to catch up on. We've got great shows for you here across the private property platforms. And one of the things that you probably want to do is to catch up on some of the old episodes that we've had of the private property podcast, but also, of course, get yourself acquainted with some of our other shows. And of course, I'm talking about the First Time Home Buyers show that comes to your screen every single Wednesday at 7:45. That's brought to you by Estee Claasen. And you definitely want to make sure that you tune into the show if you are a first-time home buyer about to buy your first home and want to get a sense of what you can expect, and also hear from people who've already walked that path and what their experience has been. Another show that we're very excited about is brought to you by which is the farming podcast. So if you know that you've got green fingers and perhaps you want to explore agriculture, whether it's crop farming or perhaps even cattle farming, then you certainly want to make sure that you tune into that. I think livestock farming is one of those things that some people have ambitions of, but you never quite know how to go about doing so. So do make sure that you tune into the farming podcast. Comes to your screens every Tuesdays and Thursdays at 1 o'clock. And we don't leave you alone over the weekend. We always bring you the Developer Show with Chad. And that's where, of course, we profile some of the best estates that the country has on offer. So that's every Saturday and Sunday, also at 1 o'clock. So we have quite a lot of shows in store for you here on the Private Property social media platforms. And one that we're quite excited about is a special web series that we started on Monday, and that is Building Stronger Homes, brought to you by PPC. And you can tune into that one at 8 p.m. So there's certainly quite a lot in stock for you if you're always looking for something to chew on when it comes to property and your property journey. And we never forget, any topic that you want us to cover. Make sure that you do drop us a message down below. We always love hearing from you. And talking about hearing from you, one of the things that we're certainly doing to wrap up the year the best way we know how is, of course, with a competition where we're giving away up to 100,000 rands across different, competitions and awards right here across the social media platforms. And one of the ones that we're running right here on the podcast is, of course, questions for the champions. And all you have to do for questions of the champions is get 4 of your friends or family members. Make sure that you give yourselves a team name. So you're going to be a team of 5. Give yourselves a team name. Make sure you watch the show live. You need to come onto the live, make yourselves known. Say, I am Team Kaizer Chiefs. We are watching live, and wait until the very end of the show where we'll be going through 5 questions. And the first team to answer those 5 questions first will walk away with 1,500 rands. We will be announcing the winners the following day. And of course, the questions are based on the previous day's episode. So it's so important that you stay tuned to the various episodes, you watch live, and of course, get yourselves ready to answer those questions as quickly as possible. And I'll be announcing the winner just after the break of who won the Tuesday competition. And we'll also be going through the questions for tonight's competition later on the show. But to get us started with our conversation, we are looking at something. We're wrapping up the year. We're also looking at what we can look forward to, of course, in the new year. And this time around, we're looking at 2021, understanding real estate trends and navigating remote working. We know that one of the things that happened due to the COVID-19 crisis is a lot of us found ourselves working at home. I myself right now am home. A number of the different guests that I've had throughout the episodes typically tend to be home, and for the longest time had been working from home. So I want to get a better understanding of some of the commercial real estate trends that COVID-19 has actually brought up, what we can essentially look forward to into the 2021 year, and perhaps what some of the trends are going to be in the new year. And to help us better understand this and even set the tone for what we can look forward to in the commercial real estate sector, I'm joined by John Jack, who's the CEO of Galetti Corporate Real Estate. John, good evening, and thank you so much for joining us.
Hey, Zama, how are you going?
I'm very good, thank you. I mean, John, it has been one of the most unprecedented years. We are facing a global pandemic that has affected every industry. I don't think I know of any industry that hasn't been affected. There've been a lot of highs and certainly a lot of lows. And I think one of the hardest hit industries is probably the commercial real estate sector, with a lot of the big corporates not, of course, being able to have their workforce in the office, and us almost rethinking working at the office or having to, work remotely. Perhaps take us through some of the trends that we actually saw this year before we even look at what we could potentially expect in the new year.
Sure. I think first of all, there was the hard lockdown, and the trend there was everyone had to work from home. So literally the world came grinding to a standstill. But what sort of developed after that, being allowed to go back to work, is the decision. Do you go back to work or don't you go back to work? Now, there's a difference in the different sectors, right? So if you take retail, for example, there's a very defensive retail where you've got sort of lower end, lower LSM, where people are literally going to buy food and they're there to buy food. And so there's a lot of sort of traffic through those shopping centers, and those have just continued to do sort of very robust trade, albeit down a bit, but still very robust trade. And so rentals have been generated there because the income is being received by the tenants, Then you've got on the other end, very high LSM, where it doesn't really matter that, you're not working, whatever. You're probably still going to the shops. You probably might not be going to the restaurants as much, as specifically the restaurants sitting inside, but there's still money being spent at these shopping centers. And so those are also fine. Where you get a problem is those shopping centers that are sort of in between the two. They're not the high LSM, they're not the low LSM, they're in the middle LSM, and there's no real reason for you to be there, It's more of a destination place, and so people have decided not to go, and those have been the hardest hit. Then, of course, if you look at industrial versus office, you can't manufacture from home. You can't assemble at home. You can't logistics from home, So those have continued to operate, albeit the difference is that maybe that sector's actually done a little better, because you look at the likes of Take a Lot have had to increase their footprint during the lockdown because there's more online trade, there's more requirement for this sort of e-logistics type of space, and they actually increased their footprint by 50% during the lockdown. We were literally going around the country taking up additional warehousing. Office has been challenging because you can work from home as an office user. Mm-hmm. I suppose the biggest difference is that you can't necessarily create at home. You can't build a culture at home. You can't, innovate necessarily at home as a team. And so those are the big changes. And I think, our sort of insight for the whole thing is that people will continue to use Office, but they won't use it in the same way that they have.
And I mean, John, if you kind of reflect on the different ways that people are potentially going to be using the office in the new year, what are your insights on that? Because as you're saying, we certainly will continue using the office. So I don't think the workplace or the office space is absolute. I mean, I know there's some people thinking, look, let's just do away with it completely. I certainly don't think South Africa is there at all, or we're going to be moving in that direction at all. So what are the different ways that you see people then using office rather in the new year?
Sure. I think, again, you've got to sort of like split up the entire spectrum of office and look at the actual type of end user. And, you look at those sort of call center type of space, right? That's sort of like a lot of people in a building where they could potentially use some of their space at home to take these calls and that kind of thing, but you're not ideally set up. So you need to continue to use that call center. And so actually those call centers have had to take more space to cater for spreading their people out in their offices, because going home is not necessarily an option. Because when you look at the home environment, you need to go again and look at the LSM. right at the lower end of the LSM. It's not an environment that you can be in at home and work. Maybe you have kids at home, maybe you have other family members. It's not such a large home. You don't have your own private space. It's not quiet enough. Maybe your internet's not set up correctly. And so those are very big challenges for working at home. On the higher LSM, you probably have an office set up at home. Your Wi-Fi is good. So all of these things are fine. But generally in those situations, you might be needing to work with a team. And you, again, can't work with a team from home. You can on Teams and that type of thing. But you can't actually sit and work on a project. It becomes quite difficult. And so what we really see is that people are probably going to reduce their office space. We've seen people going down to sort of 70% of their office space. And then what they do is they go to like the Business Exchange or WeWork or Regis, and they go and take up some flexible space where they say, well, we have another 10 people and we'd like to sign another 10 desks, and we'll sign that for 3 months. And then at the end of 3 months, maybe you've got another 10 people. You can take them on. So you can kind of like align your cash flow or your rental expense to the growth of your business. Or alternatively, if business becomes a problem, you can very quickly match your cash flow back to the reduction of your staff size. But there's always going to be a core part of your business. There's always going to be a core element of people that need to be at the office. And it differs in the different industries.
And, I mean, John, I've certainly been looking at different conversations from almost different stakeholders, those who are in commercial real estate, and also the users, right? So your actual employees, some having very mixed views around working at home, some enjoying the flexibility of, sleeping in until 10 minutes until, that meeting has to start in the morning. But I think those are probably the earlier days where you thought, you know what, I've got an 8 o'clock meeting. You can stay in bed until 10 to the moment it starts, you hop on at 8. But I think as the months kind of went by, you had to almost think long term, and people were realizing that some of them were not necessarily as productive as they would have liked. Others were saying, look, I'm actually more productive. I'm not spending as much time in traffic as I used to, so I'm actually enjoying it. So I think going forward, one of the things that would probably be quite great to see from companies is certainly giving their employees who are able to work remotely the flexibility of doing so. And I know that that's probably more of a cultural shift than it is a logistical one, because we also, I think, understand the nature of how work is in South Africa. Some corporations have a bums on seat mentality, and not necessarily tracking creativity or tracking how you're probably doing with work. But I want us to move, into the new year. When we look at then what we can potentially expect in terms of the commercial real estate trends in the new year, what are some of the trends that we should probably be mindful of?
It's interesting. I just got 2 comments on what you've said there. 2 years ago, all the chat was about sort of open workspace, open work environment.
Absolutely hate open workspaces.
and so it was like, how much sort of cubicle type offices to how many sort of fixed closed offices versus your open plan workspace. That was the big chat. And really sort of fundamentally the psychology was, are you a thought worker or are you a team worker? Okay. Now, as a team worker, you can imagine like a sales environment or a collaborative environment where people are talking and they actually like the energy and the noise that brings something to the work environment, certainly a sales environment. Whereas a thought worker actually just needs to sit and concentrate for a bit. So there might be a creative or a lawyer or whoever it might be, an architect, someone who actually needs to sit and concentrate and produce a body of work. And they required offices. And so the question was not like, open plan's the rage. It was open plan is the rage for a specific type of user. And then closed offices are what are required for another type of user, and what's the right ratio between those types of user and who's there. Now, it's exactly the same thing, because a thought worker, someone who needs to produce a body of work, is quite happy to work from home because they can sit and concentrate and they can actually get that work done. Whereas the sales guys miss the energy of the team. And it's exactly that's the differentiation between the two. And you picked up on it. And really what it is we're breaking the psychology. It's not only a mentality of bums and seats. We're breaking the psychology of, oh, I have to be at work by 8 a.m., and oh God, I'm late, and oh, it's 5 o'clock, and you're like racing into the lift, and you're trying to get into the office, and you're late, and then everyone kind of looks at you when you walk in late, and thanks for arriving, and that type of thing. And leaving work at 5 o'clock, and I have to stay there. I don't really have anything to do, but I've got to stay, and I should have been able to fetch my kids or whatever it might be. It's just broken that psychology. And I keep saying it's office space has become more of a service. Okay, it's a service to the end user. So it's there to be used. You need to use it. If you need to collaborate it, if you need to, maybe home today is a nightmare because all the kids are coming to your house, so it's better to go to work, or whatever it might be. It's a place to be with your team, with your company, to create a culture and to grow your business. But you don't have to be there all the time. I'm certainly not at work all the time. Sometimes I work from home. Sometimes I'm in the office. Sometimes I'm working from a restaurant or a coffee shop or whatever it is. It's far more flexible, and there's no panic psychology anymore. And the traffic patterns actually reflect that. There's far less traffic these days, even though a lot more people are going to work.
And I want us to take a quick break, John, and when we come back, then we will, dig deeper into the 2021 trends, because I know that I was saying earlier that some people thought, office space is going to become absolute. We know that that's not going to be the case. I'm keen to hear your view on where office is probably going to be in the new year, and some of the trends that we must watch out for, and perhaps also what then happens to unused commercial real estate, buildings, because the reality is we were already seeing quite a lot of unused office spaces prior to the lockdown. And I mean, if I look at, for example, Sandton, there were quite a lot of empty spaces. They built very bullishly, very quickly. Even in the Rosebank area, some of the spaces were lying vacant prior to lockdown. And when you're driving through now, you're seeing sort of more spaces being vacant. You also know that some of the smaller businesses could no longer pay rentals. So they had to kind of find different ways of operating in other spaces because the cost of rent was now essentially too high. So certainly keen to hear your thoughts around unused commercial real estate and what we could potentially do with them. We're going to go for a quick break. And as we come back, we're certainly going to be exploring some of these. But before that, here's a quick word from Estee Claasen.
What's up, private property fam? As you know, throughout December, we're running amazing competitions. And tonight we're talking about the estate agent competition. All you had to do was head over to our Facebook page, comment on the estate agent post, and tell us your highlights of 2020 and how you remained on top of your game. Well, drum roll please, because I have the winner for Tuesday's competition. It is Krista Droster. Krista says, I started in 2020, just before COVID lockdown, as an intern property practitioner at I'll Do Properties. Whole new industry for me at my age. I am busy with my NQF level 4 logbook and sold 3 properties and have 6 tenants in my rental properties. What a year. I have a valid FFC and I'll Do Properties are listing with private property. That's Krista, and if you want to be exactly like her, head over to our Facebook page and you too could win 1,500 Rand cash. It's happening all week. You do not want to miss this. Back over to you, Zama. Have a good week.
Welcome back to the Thursday edition of the Private Property Podcast. I'm your host, Zama Khumalo. If you're just joining us, then you certainly want to make sure that after this episode, you catch the first half of what is such a great conversation along understanding real estate trends and navigating remote working. We're certainly looking at the commercial real estate sector. We know that it's been hardest hit by, the COVID-19 crisis, and that sector is finding different and creative ways of, best, adjusting and also, of course, trying to also stay above float as much as possible. Now, remember, later on in the conversation, or certainly later on in the show, rather, I will be going through this evening's competition questions. That is the questions for the champions. And if you don't know about it, we have shared the details down here below. Remember, all you have to do is form a team of 5 with your friends and family. Make sure you give yourselves a great, unique name and join, of course, the live as we come on every weekday at 7 p.m. We will be asking questions at the end of the show that are based on the previous night's show. And the first and the fastest team that answers the questions correctly get to walk away with 1,500 Rand. We will be announcing the winner the following day because we want to make sure that we verify the right winners, that they were in fact on the live, and all 5 team members were in fact on the live. So do make sure that you read the competition details down here below, get your friends and family, and win big this festive season. Later on in the month, we'll be giving away 15,000 Rands, where we ask 10 questions. And of course, the runner-up of that one is going to be walking away with 10,000 Rand. So there's quite a lot of money to be given away. We are feeling festive. We are in a giving spirit. So you do want to make sure that you get your hands on some of that cash. Now, to get back to my conversation with John Jack, who's the CEO of Galetti Corporate Real Estate. John, we were saying before the break, I certainly want to look at some of the 2021 rather trends that we could anticipate. And I think one of them is perhaps, lease contracts. Perhaps take us through what we could potentially expect when it comes to lease contracts.
I think probably the first thing is that everyone's going to want a force majeure clause in their lease contract. Yeah. I think that pretty much the whole of South Africa ran to go see if they had the clause. Some people are so lucky that they did. 90% of people didn't. And, even if you did have it, it needed to be very specifically worded to actually be able to claim force majeure. Now, really, I think that lease contracts are going to be quite interesting because if you're a large occupier and you need to relocate, it's a significant capex amount to relocate. You've got to fit out your office. You've got to buy furniture specifically for that office, and you need to move yourself. And so the cost of that is quite prohibitive just to start off with to move. So if you're going to be signing a short lease contract, the landlord is less likely to help you out with that capex. If you sign a long contract, the landlord is more likely to help you out with that capex. So I see incentives from the landlords really jumping, so it's going to be a lot of rent free, a lot of tenant installation allowance. It's going to be a lot of maybe even amortized loans to be able to allow that tenant to move in the first place. The second thing is on the short contract side, a lot of tenants are probably going to be wanting to put some kind of lease cancellation clause into the agreement. And what that might be is maybe a clawback on that capex amount that was loaned up front. Because when you sign these long leases, you're actually binding yourself into that agreement, obviously, for a long time. But really what's happening is if you run yourself into business trouble or business failure, or in a situation like we've had now, a completely black swan, unprecedented event where suddenly you might have literally no income. Everyone plans for 20-30% down, but no one plans for zero. And all of a sudden you've got a situation with zero income and you still have a lease agreement. And is your business still relevant going forward? Now, we've got different types of businesses. So we've got some clients that manufacture, for example, aluminium canopies for trucks, where you can go camping and you can go and explore South Africa. This business has doubled, literally doubled. You've got demand for that type of car where you can drive around South Africa and go and explore different towns and climb the mountains and see the rivers. And literally tourism in South Africa from a local perspective has really sort of obviously blossomed for those that can afford it. And people need camping equipment, the type of vehicle that's able to do it. And so those types of businesses have really sort of jumped. The other type of businesses that have jumped are home improvement. So every second person who could afford it was putting a heated pool in, or that room that they just are so tired of. They're fixing the room, or they're changing the paint color, or whatever it is. So you've got guys who supply home improvement tools, business has doubled. Guys who install heated pools, business has doubled. Never been busier. But someone who's in tourism, specifically offshore tourism, business is nowhere. And so it really depends on the sector that you're in, to determine sort of what has actually happened there and what you need in your lease agreement. And that's the interesting part.
And, you know, Jack, what would you say when it comes to subletting commercial real estate?
The landlord's biggest competition at the moment. It's incredible. You've got every second person wants to sublease some kind of real estate. And so you've got a lot of landlords, and being a landlord, you obviously need to achieve a return. You've deployed capital, you need to achieve a return. You've also got the bank who's financed your property, and you need to, you know, service that debt. And all of a sudden you've got someone else who's a tenant. They're an architect, they're a lawyer, they're whatever that occupier might be, who says, you know what, we actually need 50% of our space. Now, our business continues to operate, and we earn income from legal fees, for example, but we need to give up some of our space. So any income is better than nothing. Whereas for a landlord, they need to achieve a return. So they need a certain amount of income or certain rental amount. But a lawyer looking to sublet 1,000 squares says, you know what, give me 50 Rand a square meter, where the going market rate might be 120 Rand a square meter. Now, the landlord might be able to get to 100, but he certainly can't get to 50. And that's the big challenge for landlords, because the second that landlord starts accepting 50 Rand a square meter for his income on the building, the bank says, well, hang on, your building is now worth the capitalized value of that rental. And so actually now your debt levels are completely out of whack, and we need you to settle the debt. So it has a huge effect on the gearing in the market. And I think come sort of January, February, March, the first quarter of this year, you're going to see the banks starting to call loans. And, you know, they've been very, very supportive of the market. It's in their interest to be supportive of the market, but there's a point at which they can no longer be supportive, and they're going to start to call these buildings. So I see a lot of buildings getting themselves into trouble. And you've seen these huge asset sales in the market, because they're twofold. Not only, you know, you've got pressure sellers, but then you've got other sellers who are sitting there going, well, hang on, the interest rate's about as low as it's ever been. You know, well, certainly in the last sort of 40, 50 years. Okay. And generally your yield tracks your interest rate largely. Okay. And what people are doing now is they're bidding heavily for long-term leases. So if you've got a 10-year lease, a 12-year lease, the bids are some of the best bids I've seen in the last, well, forever. You know, I've never seen bids at this level. You know, you know, properties are receiving bids at sort of 7% forward yields. And so an investor who's holding onto this property, who had always valued their property at, say, 8%, 8.5%, can now sell it at 7.5%. What a great transaction. So they are taking an opportunity to sell their asset at this very improved bid to those investors looking for long-term cash flow. And you can imagine those are the pension funds and, you know, those investors who are looking for long, sustainable cash flow. They have a mandate to invest in property, and that's what they're doing. On the other hand, those leases are 5-year leases, 3-year leases, that type of thing. They're almost oversold. They are so far apart from the 7% long-term lease. You know, you're sitting at like a 10% for your short-term leases, where that sort of spread was always so tight. You know, it was within 100 basis points. Now you're sitting at 300 basis points in certain scenarios in a micro market, you know. And that's a big trend. You're seeing significant asset sales. And that's...
Now, John, I mean, then what's going to be happening with the unused commercial real estate? Because we also know that, as I was saying earlier, we already saw that there were some buildings that were vacant pre-lockdown. And I think certainly when I look at some of the areas that I'm in, more and more sort of commercial real estate has gone on to be vacant. What do you foresee happening to that real estate?
Sure. So, we sit here as a private investor, as a private landlord, you sit with that hat on and you say, well, for me, I would want a tenant, or I'd want to think of a new use for this building, perhaps change to residential or mixed use or whatever it is. I'm going to change the use of this asset to get a return, right? That's what you would do as a private investor. The fund sits with a completely different hat on. The fund goes, well, we have a portfolio of properties and we manage a vacancy percentage in that portfolio of properties. And we might not be happy with the percentage of vacancy, but still there's enough cash flow to cover the whole picture. So we would rather keep it vacant than accept a lower rental. Whereas a private guy might accept a lower rental because something's better than nothing. Whereas a fund won't accept a lower rental because then the bank will say, oh, you've just accepted 50 Rand a square meter on your building in Sandton. That means Sandton is obviously trading at 50 Rand a square meter. That means all your properties in Sandton on reversion are going to revert to 50 Rand a square meter. Therefore, the debt is out of kilter. Therefore, you need to put equity in to start managing the balance of your debt ratios. And that's what's going to happen. They're going to sit vacant until they find a tenant, or they're going to be converted into residential or sold to owner occupiers. It's a wonderful time for those owner occupiers who know they're going to continue to use office space. It's a wonderful time for them to buy their properties because the values are so far down on what they used to be.
Well, John, we're certainly going to leave it there this evening. Thank you so much for joining us, and hoping that you, your team, and certainly your family have a great festive season. And definitely looking forward to having you back on the show in the new year.
Thanks so much.
And that is John Jack, who is the CEO of Galetti Corporate Real Estate. We're going to go for a quick break, and when we come back, we are, of course, doing questions for the champions, and we'll also be showing who the winners of the competition that we had on Tuesdays were. Certainly want to not miss this one, especially if you and your team are already tuned in and you want to make sure that you catch what this competition is not only about, but what tonight's questions are. We're going to be back just after this. Welcome back to the Thursday edition of the Private Property Podcast. I'm your host, Zama. Well, it's that time of the evening where we are talking money, we're talking competition, and talking giveaway. And we'll start with the giveaway. The winners of the Tuesday leg of questions for the champions is hashtag Team YOLO. Congratulations to Team YOLO. You walk away with that 1,500 Rand in cash. The price is going to be paid out tomorrow. So we pay out all our prizes at the end of the week. So do make sure that you get in touch with us. And of course, we will be giving you that prize. And it is that easy to win 1,500 Rand with you and your team. All you have to do is form a team of 5 with your friends and family. Give yourselves a unique name. Then make sure that you tune in to the Private Property Podcast every weekday at 7 p.m. And when you tune in, make yourselves known. We want to see that your team members are in fact watching. Then you wait for this time of the evening where we ask questions based on yesterday's show. But we didn't have a show show on Wednesday because, of course, it was a public holiday, but we're going to be basing these questions on Tuesday's show. And it's that simple. The first team that answers all 5 questions correctly walks away with that 1,500 rands. And for this evening's questions, the first question is, a special levy only requires the approval of the trustees of the body corporate at a normal trustees meeting and not all the owners in the scheme. I'm going to repeat that one. It is a special levy only requires the approval of the trustees of the body corporate at a normal trustees meeting and not all the owners in the scheme. So that's the first questions for this evening's competition. It is, of course, questions for the champions, giving you an opportunity to write your answers below. Remember, when you write your answer, use your team's hashtag so we're able to track who is answering the question. And the second one is, a community scheme is a group of people saving up for shared use of and responsibility for parts of an area and hotels they booked in for vacation. That is, a community scheme is a group of people saving up for shared use of and responsibility for parts of an area and hotels they booked in for vacation. And that is the second question there, and it's also on your screen. I see the first question is already up on your screen, so we're also putting them down here so that you don't miss them at all. And the third one is, the community scheme ombud services was created in 2015 to deal with dispute resolution in community schemes. We talk about this scheme so often. I'm sure a lot of you already know this one off the top of your heads. And it is, the community scheme ombud services was created in 2015 to deal with dispute resolution in community schemes. And then the fourth one is, schemes with more members are most likely to pay less in levies. That is, schemes with more members are most likely to pay less in levies. You can see how easy these questions are. We make sure that we keep them as simple as possible because we're not writing an exam. We want to give away this money. We want you to win. So do make sure that if you haven't already, formed that team of 5 members, and make sure you tune in to the Private Property Podcast every weekday at 7 p.m. And it really is that simple to be able to walk away with that 1,500 rand in cash. And the last question for this evening is, if the tenant breaks the rule, the property owners is liable for any fines that may incur. So that is, if the tenant breaks the rules of the community scheme that you live in, the property owner is liable for any fines that may incur. Well, those are the 5 questions for this evening's competition. Do make sure that you answer them down here below. Use the hashtag of your team name in order for us to be able to track you. And of course, we will be announcing the lucky team that's going to walk away with that 1,500 rand tomorrow as we verify the details. Well, that's it from me, Zama Khumalo, and the rest of the Private Property Podcast team. We're back again on your screens tomorrow at 7 p.m. And until then, hoping you're staying home and staying safe.
Hi, I'm Alan Footman. I'm a sports tour operator from Cape Town. My family and I have been living in the southern suburbs for 21 years. What we love about the neighborhood is it's very family orientated. Lots of things for the kids to do, especially here where we are next to the farm, where folk can walk the dog, go for runs, and enjoy the fresh air. In the southern suburbs, we're lucky enough to have some of the top schools in the country, and on top of that, we have the University of Cape Town, one of the most famous universities in the world. Newlands is a great suburb, all the sporting amenities, Newlands rugby ground, cricket ground, etc. Down the road at Claremont, lots of shopping centres for the kids and for the mothers to do their shopping. Fantastic pubs and restaurants around like Forries, Springbok Bar. Bishop's Court is full of beautiful upmarket homes. Kirstenbosch Gardens, National Botanical Gardens right next door. What attracted us to Constantia is the large open spaces. I've always wanted to be a farmer, and now I'm living next to Kruger Constantia Wine Estate, the oldest wine farm in the country, where you have fantastic wines, great restaurants, got the best of both worlds. My family and I have loved every moment of living in Constantia. We couldn't be happier, and this is our neighborhood.